All right, topic A tonight. Markets were scared off early in the trading day the moment a 7.1 Japanese earthquake hit. Stocks plunged 100 points right off the bat. But shares did wind up finishing the day well off the lows, taking only a 17-point loss. The Dow remains up 7.2% year to date, very resilient. Now, you're looking at live CNBC coverage where all eyes are on the budget shutdown. Minutes from now, talks will begin in the Oval Office. Is this an economic threat? But the best news of the day is still that the retail stocks index advanced almost 0.5% on unexpectedly strong chain store sales numbers. And along with that, jobless claims fell again, now 6 straight weeks below 400,000. Do we have a resilient consumer? And finally, the ECB followed through, raising its target rate slightly by 0.25%. Hey, Ben Bernanke, are you watching? Let's bring in our market panel to see how you can make some money. Here now is Lee Munson, Chief Investment Officer at Portfolio, Mike Ozanian, Executive Editor at Forbes Media, and Zach Karabell, CNBC Fast Money contributor and President of River Twice Research. Mr. Munson, I want to start off with a happy thought. At least I thought so. The retail chain store sales were better than anyone expected. They were, what, plus 2.5%? They were supposed to have fallen by 0.5%. The gasoline tax is not kicking in. You had good numbers. Costco, limited brands, Bed Bath & Beyond. Stores like that, shares all rose. What do you make of this? Is the consumer going to outperform expectations?
You know, I think so. I mean, Larry, you and I have been talking about the subject of the gasoline tax, and my premise and theory all year has been very simple. We, compared to other countries, like, say, India, don't have as high of a percentage of the dollars that we make that goes into things like food and fuel. Not that it doesn't matter, not that it doesn't hurt on some level, but I think these numbers prove that it's not the end of the world. I was just in Arizona, and I pumped $4 gas into my car, and, you know, it's not stopping me from buying a new computer. So I think the consumer is going to do all right. Never bet against the American consumer. I think this is just a resilient consumer, and I would probably be selling retail stocks right now on such good news.
Oh,
but I do think it.
That's interesting. But you're not, Mike Ozanian, you're not
just
in your
trading.
head.
I'm just trading.
I would sell them too. And Mr. Munson's wife obviously doesn't shop at Whole Foods like my wife unfortunately does. But I'll tell you this, you know, all this stuff about consumers deleveraging and all that, if you take out, Larry, the mortgages that have been written off, consumers are leveraging up again. They're filling up those credit cards. That's why we've seen some of these retail stocks.
By the way, consumer credit rose today, but not credit cards. It wasn't credit cards. It was car loans and student loans. So it isn't revolving credit. But wait a second. Why do you think sales did so well today if the consumer's in such bad shape? This is a serious question because I have fretted about the gasoline tax and $4 a gallon as we're now approaching. Why do you reckon it didn't show up in the numbers today?
Because I think right now the economy is fairly strong. We haven't seen unemployment rise, but we're way behind where we should be in an expansion in terms of adding jobs. And to me, what energy prices are telling us and what food prices are telling us are not so much what consumers are going to spend today, Larry, but how much widespread inflation is going to be 3-6 months from now. That's what it's telling us. The same thing that high gold prices are telling us.
All right, fair enough. Zach Karabell, I want to get your take. Are we underestimating the consumer? That's point one, Zach. Number two, are we underestimating the whole economy? And while we're at it, Zach, are we underestimating the global economy? I want to ask you all three. They are related.
Well, first of all, it's good to see you again, Larry.
Yes, and you too, Zach.
You know, I did an article for the Daily Beast about 4 weeks ago about why rising oil prices would not destroy the American consumer, the economy. And what was more interesting to me about that, other than my belief in my own correctness, was what absolute fury greeted this piece, you know, amongst people who felt like to even suggest the fact that rising gas prices might not be an economically wrecking event was an insult to the struggling millions. And I think part of the problem is, you know, when we talk about this thing called the American consumer, and you and I have talked about this before, it is indeed a statistical fiction that increasingly masks the fact that, you know, if you're one of 60 or 70 million people who are living pretty much at your limit right now, yeah, any incremental increase of any good is going to be a significant problem. But the overall economic system, both in the United States and globally, is unfortunately for that reality, not being driven by the economic activity of most of those people. And so, we really are in a world where there is incredible capital formation. We live in very stable markets, as these days of continued question marks and turmoil without major index movements down and, in fact, some up show. And we live in a world where that capital and those who are doing well and corporations are really driving an incredible global economic boom, even while leaving out a lot of people who will be hurt by the rising cost of gas.
But what you're missing, with all due respect, is how the rising energy prices then get filtered into the rest of the economy. It's not just the dollar amount that gas goes up. Look at the transports. They were leading this recovery in the stock market for the longest time. Now they're starting to lag. They're starting to fall behind. It's not the actual dollar amount. It's the signal, what it's telling us about inflation and how these higher energy and food prices are getting filtered into the rest of the economy.
Right, but even
Lee Munson,
let me ask you, do you believe in the correctness of Zach Karabell or the correctness of Michael Ozanian? I've got two correctness here, but they're at odd loggerheads. I got inflation tax on the one side, and Zach says we're all worrying too much. Where do you come out?
I'm more with Zach because, you know what, I felt his pain. I got a lot of hate mail when I was talking about the idea that the gasoline tax didn't really exist. Larry, I told you there is no gasoline tax, and people get all, upset about it. And, I also want to say this idea that we're going to get inflation and somehow that's going to be this horrible, awful thing that's going to destroy all spending, I think is, I don't think is correct. People have to remember, we get a little inflation. Stocks should continue to keep pace with inflation, and some people disagree. I don't. But I think people have a pent-up demand. It's summertime. We've had a couple years of bad economic activity followed by a lot of upswing. And I think those people who still have a job, they're probably going to still have a job 3 to 6 months from now, and they want to go out and spend some money. And there's a lot of anecdotal evidence, like today, where people, they're sick and tired of it. They're sick and tired of hearing about inflation.
I'm sorry. How about the commodity index being at a 2-year high? How about gold being at 1,400?
I love it. I'm trading commodities.
Hey, listen, how about the fact that we spent billions and trillions of dollars on TARP, QE1, QE2. Housing's worse now than it was then. We have a worse problem with banks as far as too big to fail goes. We have the big banks have a bigger market share. All these rules and regulations and money printing did nothing to help the unemployment rate. And in fact,
who cares about the unemployment rate? There's slack.
Well, actually, the unemployment rate.
Why do you think that we should have an unemployment rate that is statistically different than Europe? Europe's been dealing with double-digit unemployment for a long time.
So you want socialism? You think socialism's the way to go? That's how they got their unemployment rate up.
You call me a pinko? You're going to be barking up the wrong tree. Germany's sitting right now. Germany's sitting at 4% unemployment, and they're rising rates because it's overheating. I don't want unemployment.
The one guy that could say this is Paul Ryan.
Let me go back to Zach Karabell. Zach Karabell, make some money for us. Where are you investing? You have an optimistic point of view. I want to leave the pinko debate alone for just a moment, Zach. Help us make some money this evening, would you?
Oh, I was loving the pinko debate. It was like 1952 Redux. It was great. The last time the American economy was really thriving. That's when that debate was thriving, too. So maybe that's a leading indicator.
How about the Reagan years when it was thriving?
Well, there too, right. So there you go. Maybe this debate and a strong economy go together.
No money printing.
Look, I think the fact is there are a lot of places to invest your money in sync with a global economic story that even if Mike's right about the problems of the U.S. economy and commodity and other inflation, there is commodity inflation, there's raw material inflation, there's food inflation, and from a purely dispassionate investor perspective, I'd like to invest my money with the people who are benefiting from commodity inflation. There are a lot of raw material producers. This is not going to ring bells of, wow, what extraordinary trenchant insight. This is both a momentum trade, but one that's really being driven by fundamentals. And look, you still have the rise of China, which, as you know, I think is the tectonic shift story of our decade plus, and it remains that way.
Let me just get around real fast. Lee Munson, real fast, make some money for me. What's your favorite investment right now? Real quick, I'm running out of time, buddy.
I like the yen right now. I like commodities. I think banks are going to have their day in the sun. There's a few techs I like. I say be passionate about the investments. Keep employment relatively high. Corporations will be able to pick and choose talent. People will work for less, better for the
chemical
economy.
Companies. I like chemical companies now. Yeah, absolutely.
That takes advantage of the global story, the U.S. story.
Right, and also the fact that when it comes to the lower dollar, some of these are going to be able to benefit from exports.
All right, terrific. We're going to have to leave it there. Gentlemen, thank you very much. Lee Munson, Mike Ozanian, and Zach Karabell, all out of the early 1950s.